Hello and welcome once again to one of our landlord updates. I'm Matt Dilks from Christopher Shaw Residential and I'm joined by my fellow director James Tiller. At the start of the lockdown we spoke to Ashley Rich from St Barts Finance about the options for mortgage deferrals or payment holidays. Now some 4 weeks later, with a continued squeeze on the economy, we wanted to touch base again with Ashley to see what is happening in the world of mortgages and lending since we last spoke. Welcome Ashley.
Good morning.
Thank you for joining us again, and thank you for sculpting that magnificent man beard again. It's always a joy to see.
I spent an hour on this morning.
I bet you did.
Just for you.
It's not doesn't happen like that overnight. So we just, for those who maybe missed the last video, obviously it's a good few weeks now since we last spoke. If you can just give us a quick recap as to what your company offers and what you do within St Barts Finance.
Yeah, sure. So I'm a mortgage and protection advisor. So I will look at clients' finances, clients' health, things like life insurance, mortgages, remortgages, shop around and get them the best deal, save them lots of money.
Brilliant, brilliant. And you're based in Charminster?
Yeah, so we've actually got 4 offices in total. So we have one in Salisbury, one in Parkstone, in Ashley Cross. And we have YBS, which is Yorkshire Building Society, which is in the town centre. Yeah. And I work out of our head office in Charminster.
Lovely, great stuff. So what's happening in your business? Are there any developments that the general public may not be aware of?
Yeah, I think, to be honest, at the moment, I get the feeling that there's a lot of people that aren't making any progress. They're not actually doing anything at the moment. They just think, oh, okay, we'll do it later. When actually it's still full systems go. We're seeing a lot of cases still going through, and the main thing that might potentially hold anything up is just purely valuation. So for us, we're kind of, I was actually saying to James, these have been the longest working days I've ever had. So yeah, it's still in full operation.
There's no 9 to 5 when you're working at home. That's
no.
Sure.
So far from it.
Yeah, absolutely. So have there been, one of the next questions was, have there been many new applications since the start of the coronavirus pandemic? And who are the main types of clients that you're seeing at the moment? Is it people remortgaging, movers or first-time buyers? Most of what we're seeing is remortgages, yeah. Okay.
We are still getting new applications come through. I actually had a client of mine get an offer accepted yesterday.
Wow.
So we're going to do the sign-up on that today. The certainly new applications is the one that's been hit the most.
Yeah.
Again, that all comes back down to valuations. So if you can imagine that anyone that had a 5% deposit or a 10% deposit, there are a few lenders out there now which will still do a 90% mortgage. A lot of them are doing a lot less than that. So that has slowed the market down. But remortgages, it's been busier than it ever has been. I think a lot of people who might have been on a variable rate previously taking advantage, and so they should, of the current low interest rates.
So, Ashley, are the banks still actually lending, and is it possible to obtain mortgage products? Has there reduced packages, or what sort of been going on?
It certainly is, yeah. So banks and building societies are still lending. So the application I was looking at for a client yesterday was a 90% mortgage. So they're looking at a £250,000 property with a £25,000 deposit. I think initially a lot of the lenders kind of backed off quite quickly. I think where the government stepped in and introduced the furlough scheme, they are slowly coming back up. So we're seeing a lot of the big major lenders like Halifax that are still offering 85% products. So it might be a case of that you might need to wait because you don't have that extra 5%, but those that did are still proceeding. It slowed down a little bit, but not stopped.
And last week we saw HSBC stop buy-to-let mortgages. Obviously, that's something that will affect a lot of our audience and our clients. And this morning we've seen some student lenders tighten their criteria as well. Have you seen other banks cut back on lending to landlords at the moment?
Yes. So a lot of the go-to lenders have certainly made their criteria a bit stricter. A lot of the time that is going to come back down to valuations again. So the lenders, what they're looking for is the good risks. So they're looking for the healthy, the safe bets. And you can understand why. They can't go and see the property. It's it's like asking someone, would you buy this house without seeing it? I can guarantee you there's a large percentage of people that would say no to that, and the banks are no different. There's still a lot of lenders out there that have changed their criteria in other ways. So, for example, if you were a landlord and you were still full-time working and you were using your income to supplement the loan that you were applying for, we are now seeing there's slightly more restrictions on that, but the rest of the application in terms of like rent versus the mortgage, that hasn't changed at all. So there have been restrictions. Hopefully that's kind of where they'll plug it now, because everything's kind of getting settled. We're getting used to lockdown life and everyone's kind of settling in a bit more.
Are HSBC the only ones to pull the product entirely?
To the best of my knowledge, no. I do think there's a couple of others that have stopped doing buy-to-let mortgages. I need to double check that. Really should have looked that up before I came on here. Most of the lenders out there that do buy-to-let mortgages, they've just tightened criteria, just to again make sure it's a slightly safer bet.
Sure. And what about remortgages for landlords? What's happened with those?
Well, they again, that's kind of it's a kind of push and pull relationship. So where they've sort of tightened criteria on the new cases, on the older ones, on the existing cases, that's where they've loosened criteria. So before, if, say, for example, someone had owned 70% of their property or 65% of their property, they would have asked for a hard valuation to be done. So they would have sent around a surveyor and had a look at the property. Well, now they're doing what's called a desktop valuation, where they are looking at information on the internet, they're finding details about the property, which they would have never done before. So where they're kind of not accepting as many new cases, they're actually being more lenient on the older ones to give more freedom in the market.
Yeah. Sure.
Right. And referring to maybe some other products, have you seen any other kind of mainline products cut back at this stage?
Yeah. So initially, we actually saw a large portion of the market really restrict their lending criteria. Some lenders, some big lenders as well, saying that they wouldn't lend over 60%, which, I mean, it's just insane. But the attitude they took to it, I don't think was wrong. And in fact, I kind of commend them for it, because it was looking like there were going to be tens of thousands of people that were going to be unemployed and then can't make their payments. So why would they want to take on all that extra lending when no one can afford their mortgage? Obviously, the government have since stepped in, introduced the furlough scheme, so people are still getting an income, albeit only 80%. But people are still able to afford their mortgage, which then the lenders have then adjusted to. And as a result, I'm very thankful, because it means that we can still, I still got a job. So yeah, that's been brilliant. So
good. So $1 million question, I'm going to put you on the spot now. As an industry insider, where do you predict the lending market heading in the next few months?
I mean, it's kind of.
We don't hold you to this, so.
I was going to say, get my name pulled up in the local paper in a couple of weeks' time. I strongly believe that they will actually increase the list of what's classified as a key worker to try and get industries moving again. So, whilst you might have someone who's an events manager or runs gigs or music festivals, they won't be able to go back to work. But I think people like surveyors will, because it will then encourage the mortgage industry to push on forward, which is a huge multi-million-pound industry. So that then automatically increases so many other jobs. I think call centres will start slowly opening back up, but they'll be on a restricted basis. I think we should start seeing the return to normal probably end of May, beginning of June. I would imagine, I'm hopeful, that they will start doing hard valuations again by the middle or the end of next month.
Yeah, I would imagine we would probably fit somewhere in that kind of list. People that would probably filter back to work. Probably yourselves as well. I mean, I know, your business may be not as reliant on face-to-face custom, much like ours. There is certain bits of your job that probably are face-to-face, but probably a lot that you can do within your offices, without taking any risks.
Yeah, I mean, I'll be totally honest. Our director, Steve, I think he sat there going, why have I been paying all this rent for this time? I mean, it's basically made no difference. So who knows? You might see some changes come back. But
You might be able to stay in your pajamas a bit longer.
yeah, exactly. Yeah, 100%. But yeah, it's been really interesting. We've obviously adapted to it quite quickly and quite well.
Yeah.
We are very fortunate in the sense that a lot of our, we actually have our own built-in client system, which not a lot of brokers have.
Yeah.
So we can actually pick up each other's cases and workload. We've always worked well as a team, but even now we're still able to work quite fluidly, if that's even a word, which has been brilliant. So yeah, it's kind of the face-to-face value of it though. I really like seeing clients. I like meeting clients, and yeah, so I'm kind of in my own personal world of hell because I'm a little bit social. So yeah, but it's it's been good.
Just one last question for me, Ashley. So what would your advice be to people who may be thinking about withdrawing from the market? What would you be looking to speak to them about?
In terms of clients withdrawing?
Yeah, or people that might be thinking of, moving properties on, or would it be worth looking at remortgage options, or what would you suggest for them?
100%. If you're in a position where you can potentially look at your finances at this moment in time, it's a perfect time to do so. As you know, the bank base rate 0.1%. It's the lowest it's ever been certainly in my lifetime. So it is 100% worth looking at. And as I said, there are so many people out there that have either been on a tracker or been on a variable rate, and they're now taking advantage of the nice low interest rates. So, if there's a fire sale, you'd buy. And it might sound a bit corny, but I've always been staggered by the fact that 1%, the majority of the world's wealth is held by 1% of the population. It's because the other 99 aren't or are doing something that the 1% are. And at the moment, I've got a client who, the one who had his offer accepted, got it an extremely good deal. So is now the time to actually still be shopping around? Yeah, potentially. So I would say stick with it, keep going, and try and get deals where you can.
Yeah, be proactive.
Well, that's been some really good insight again, Ashley. Thank you very much for joining us. It's been really good to talk to you and find out what's been going on your side of the side of all of this. So thank you very much again for taking the time out to speak to us.
No, thanks for having me. It's lovely to see you guys.
Thanks, Ashley. We'll have to have another catch up soon and get a beard update.
Okay. Do you want me to grow it out?
I would love you to. I want to see a plait. I want to see a Viking plait.
Oh God.
I'm a bit behind you, but yeah, thanks again for joining us, and you take care, and hopefully we'll see each other in person soon.
Great. Cheers, Matt. Thanks, James.
Take care. Bye.